Tuesday, August 11th. Good morning. Little bit of a slow day ahead of tomorrow's CPI. That being said, some data's already hit. We'll talk about that. Overnight, stocks mixed. Asia, very mixed. Europe up, indicating up here onshore. Across the board, VIX at 15.5, Bitcoin down. Oil mixed, call it down, but we breached 80, so no bueno there. Gold, platinum, copper up, dollar mixed. Not a heck of a lot of data overnight. We breached 470 on 10s into the close yesterday. Definitely a messy afternoon. News out of Iran continues to move in the right direction, by the way. I'm somewhat flummoxed by the direction of oil. Shocked, not the right word, because almost on a daily basis, you get contradictory information out of the Middle East. That being said, I think for the last several days, both sides have really indicated that we're closer than we are farther away from a deal. So, as I indicated yesterday, kind of feeling like the market was a bit offside, that continues. Bonds slightly better. MBS a tick or two better. Most of the damage was really done down in coupon. You're talking, belly 5.5, 6s really holding up. 6.5s kind of in the range that they've been in. Let's talk about this morning's data. Business optimism up. I don't know where you get that from, but we've got that going. And ADP 8.25, down from 15. I didn't really take a look at this, but just sort of looking at that data a second time this morning, I'm curious if somebody has an ADP weekly chart. I can't recall an 8.25 number. Let's see here. All-time peak was 40.75, which was May. Record low, minus 11.75 in November. Okay, here we go. We do have a weekly chart. We will do a 1 year. If this is right, the chart started last September. It makes sense, sort of a newer, and let me share this. So, even if you do a 3-year, we're still starting here. So September 13th must have been when we kicked this off. And again, it's been in the last year for sure. I thought it was actually later than last September. This seems newer to me, but nonetheless. So we've printed 5 negative numbers on a weekly basis. Not 100% sure why we're not caught up over here. 8.11 printed 8.25. And it looks like this 15 was revised down, unless we missed one here, which, 3, 14, we did miss one. So we've printed 16.25, 15, 11, 8. And you look at where we were here, right? 40, 40, 40, 40, you printed a 40 handle-ish 4 times in 6 weeks. And look at this trend here. Really, and I don't know why they don't have a bar here, but really, really, really hard to ignore. And so let's put some context behind this. Rates were lower, right? Rates, popped up. Rates were lower. rates popped up. In terms of dual mandate, and I'm going to keep beating this drum. I'm going to pretend that the Fed has their head screwed on tight, no disrespect, and are simply, tunnel visioned on inflation, employment situation, right? We just printed a bad ADP. As far as I'm concerned, a terrible non-farm payroll. Look at this trend in the weekly jobs numbers. We printed a sub 50 contraction employment number on ISM services. Notwithstanding tomorrow's report, inflation has missed to the low side. I don't understand. And the driver behind potential inflation or inflation concerns is moving in the right direction. I just don't see 470 on 10s. I just don't see it. And I think that I think we're offside. I said it yesterday. I'm going to say it again. Give me a 3-month. We're about 50 basis points above low yields on 2s. I'm not seeing it. Look at ADP employment, right? This is the monthly number. Whatever happened here is likely over. We pull wages. This continues to be a concern, right? Well, that's 2025. Let's do hourly earnings month over month, right? So it's building. Understand, people can't spend money they don't have. Sort of building here. Now look at where we're going. June, a little bit of an outlier. Hours up a little bit. Look at Challenger job cuts. This would be a bond unfriendly trend. I will give you that. Look at this for employed persons. No bueno. Continuing claims, not good for rates. I'll give you that one. That's an outlier. I'm pretty sure the employment cost index heading in the right direction. I wouldn't call that right. So yeah, this is a really good chart for you guys to look at. The JOLTS number, has become a more hotly followed indice. The good old U6. Haven't talked about U6 in a long time, I feel like. This would be sort of a bond unfriendly trend that we kind of was going in the right direction for rates. And looks like wages have begun to stabilize a bit. Quite a bit of an increase since August. So anyway, I think that there are a few components in those data points that maybe give you a little bit of pause. But as you can see on the greater charts, and some of the buying, I'll use air quotes, in bonds is accelerating. We're down about a basis point, even closer to 2 on, depending on duration, up maybe a couple ticks on MBS. So listen, I continue to say we're offside. I'm more float bias than I am lock bias right now. We've got Some home sale data at 10. And that's really it. We roll Fannies tomorrow, and 8:30 is the first day of the rest of the month. Let's talk about that report. We printed a headline of negative 0.4. We're expecting 0.1. We printed an annual core of 2.6. We're expecting 2.5. And we printed a monthly core of 0, and we're expecting 0.2. If we print a 0.2 core, let's talk about this for a second, right? That's 2.4 annualized. That does not scream rate hike, right? And if that backs up against a 0, that is a 2-month 1.2 annualized rate. That actually screams rate cut. So I want you to think about this for a second in my statement of, are we off sides here a little bit? Now, obviously, I'm talking out loud here. We don't have this report behind us yet. But let's say all we do is hit expectations. What we're seeing is a worsening employment situation, whether it be the weekly ADP or the monthly ADP or non-farm, right? What we see is surprisingly low inflation relative to expectations based on oil prices. What we see is the potential for an annualized 2-month core, and I'm going to bring up monthly CPI here as well before we conclude. Just let's take a look at that. That's talking sub 2. Anything above 2, Fed hikes. Anything below 2, Fed cuts. I'm oversimplifying. Let me see here. Seasonally adjusted. Can I get a 1 year? Oh. I want rate, though. I don't want the headline number. Why can't I find this in the, is this our, all right, here we go. This will be a good one. All right. Core PCE month over month, right? So when you look at the last few months, 0.3, 0.2 is 0.5, 0.3, 0.8. I don't know where they're coming up with the 0.1 because I'm showing we were flat, right? But I'll use the 0.1. 0.3, 0.2 is 5, 8, 9. Let's say we print a 0.2. We're at 1.1 divided by 5 months. All right. Because I'm looking at a much broader period for you guys. So 1.1 divided by 5 times 12. We're at 2.64% inflation over a 5-month with issues in Iran. I don't know that I see it, right? Sure, there's room for being somewhat restrictive, but hikes, I'm not seeing them. Especially understanding where the price of oil is. This is a pretty tame inflation. We look at PCI, don't love the direction of that. Like the direction of the monthly. Let's look at quarterly PCE. Q1 was the outlier, right? And if you remember, here is where I was saying, watch out for inflation. And here you go, right? It's all in energy. If we've solved that problem, what are we worried about? I guess that's my question. And that's your bet if you're a betting person. Are you betting on the end of the conflict or are you betting on it continuing? So here's the bottom line. What are you doing today? Well, You know, you're going to hate my answer, but what you're doing today is you should have locked Friday, like I told you. But that being said, 6.25 and up to me is essentially full on lock based on the chart that I'm looking at. If I pull a 2-day chart, round numbers, 930, we're actually better than 930 levels yesterday on 6 coupon, which tells me that you might actually see some better pricing on rate sheets than yesterday, even though we're worse. We've talked about that. I would say based strike dependent, maybe you're, a couple basis points worse on some rate sheets. 6.5 coupon, I think, is going to tell the same story. Wouldn't be surprised if you're anywhere between 5 basis points worse to 5 basis points better. I got to tell you, even 5.5 coupon, I mean, I think the worst of it is an eighth worse. And I think I'd expect you to arguably be better than any negative reprices yesterday. And your 5 coupon is where you're going to get slapped. You're as much as 10 ticks, 30 basis points worse. So long story short is, how much risk do you want to take going into tomorrow, right? For all intents and purposes, the data is done for the day. If all things are equal, when these rate sheets strike, I think what you're going to see is plus or minus yesterday's rate sheet. You've survived the negative reprices of yesterday afternoon. You're going to mostly get those back on today's rate sheet. Do you want to take risk into tomorrow's CPI? That's your call. I'm hesitant to do it. It's a really, really, really tough month to try to figure out. Half the month you had low oil prices or lower. Half the month you had high oil prices or higher. And what's going to win? What's going to reign supreme? Did those even have an opportunity to find its way through everything else? I think this is one of those reports where you very well might see, and these aren't my predictions. I'm just making up numbers and perhaps exaggerating the numbers for effect. I wouldn't be surprised if you saw like a 5% headline and a flat core. You know why? I mean, and we looked at oil prices off the top of my head. I think it was something like July 18th when they started to go up. And that certainly didn't make its way into stuff on the shelf, right? And arguably, the low oil prices in June could very well have a residual impact on July, right? So you see some lower prices on the shelf. You see, perhaps for the better part of the month, some lower prices at the pump. And how quickly did 1 week or 10 days worth of high or higher oil prices really impact CPI? I got to tell you something, and maybe this is the optimist in me. I don't see it. I think if anything, we have a better chance of the August numbers being worse than we do the July numbers. I'm going to tell you I'm 70%, maybe higher, that this core number is going to surprise to the low side. I think that your annual number and or your headline monthly number very well might surprise to the upside. And how do we digest that? And how much risk do you want to take on? You only have about whatever it is, 10 days, 12 days until refi day, and you don't have an opportunity to react. I'm almost full on lock 6.25 and above. The chart doesn't merit you taking on risk. I think below that, depending on when you took the lock on and depending on when you're going to fund the loan, that I'm much more willing to take risk on there. I might be 70% float. I have a feeling that this report's going to be mixed. And long-term great for bonds or good for bonds, but I don't know we're going to trade it that way. Be careful. It's going to be tricky. Can't wait to go through this one tomorrow with you guys. As always, thanks for joining live, watching on replay. Bulls and Bears make money. Pigs get slaughtered. Have a great day.